The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour. My pleasure to be here. This is Friday, May the 2nd. Moving right along. We've got April out the way, finally, into May. So let's do a couple of things here. We're going to, I did Steve's show earlier on this morning, 9 o'clock to 10. There was a great show. Oh, just a great show. Just a few minutes ago ended with Tom and Daryl. And they were discussing using the program that Daryl has developed a system for that he uses in the diagnostic trading hour, the NADEX system. I have to tell you, it's a remarkable way of trading in the non-standard. It probably will become standard one in the non-standard medium. So that was just great and fabulous trades, very impressive. So let's do a couple of things here. I'm going to run right now. I'm looking at the TLT, which has spiked higher. It's had a bit of a resistance, but it's up at 112.32. When I look at that, I have to quickly go over to my weekly chart and say what's happening in the T-bond yields. And look, the yields are falling in the Oh, that's interesting. In the 30-year, and now the 10-year has taken out the low of 25.79, is gone to 25.74. That starts a leg to the downside. And Yoda in the den just reminded me something that I've been talking about for a very long time. I haven't actually mentioned it for a little while. I'd spoken about years ago. I'm talking about 10, 12 years ago. That at some point, there's a good chance that we will Japanize our bond yields. That bonds will rise and yields will just keep coming down. And they'll come down, and it will create almost a 0% level. Well, we've seen that a couple of times, but even now you've got the yields pulling back, which is remarkable. There's this little cluster pattern way back at 54.08. That's 5.4% in the 30-year, way back in, I used to have this written down. So let's see, back in June of 2007, the white one is the 30-year T-bond yield. Remember, I'm talking yields. 10-year, the yellow golden color is the 10-year T-note, and this cyan color, the light blue, the FVX. So we've got TYX, TNX, and FVX is the 5-year. Now, the 5-year is still holding closer to the recent highs. So there's a little bit of a divergence there, but wow, this is something to behold. Why? Because within the context of the bonds the bond yields maintaining a low level, it invites the housing sector to be more active. And yet we've seen that there's been a bit of a slowdown. So how are we going to reconcile these two things? I'm not sure. Most importantly, what I'm looking at here is that the volatility index is at 3.23. It's down 2 cents. And the Dow's down 15 at 3,544. I'm watching this real closely because it's getting to some support. And finally, the XIV, which is the daily. Wow, this is interesting. This is the daily inverse, the volatility index. As the volatility goes up, so prices normally go down in the equities, and as it comes down, so prices go up. And now what we're doing is we're seeing that the VIX is starting to form some kind of base here in the high 12s, the 13s, and the XIV has just gone to leg D for the first time in the last couple of days, been climbing higher, and this has to be watched real closely. Why do I make a big deal about this? goes within the context of, let me just move this away here, within context of, I've been talking about upside limited, even though if there was, you know how close 6,631 was the all-time high in the Dow. Today we went to 6,620. Yesterday we were at 16,000. I think it was 615 or something. So we're getting closer and closer. If we get there in leg D next week, I suspect it won't be all that much higher. And then we're probably going to see a consolidation take place, because what we're seeing also now, which is very important, we're going to talk about in a minute, is that the momentum stocks, which were on fire for 5 days, are starting to stall out. Kind of LinkedIn is dragging them down, although it's still way off its less way off its low than it was last night. Most importantly, what I'm looking at here is in the S&P. So the Dow needs to get to 16,632, and that makes the weekly positive for leg C. It says it should still get a leg D. It doesn't say how high. It just says there should be a higher high than that. The T-bonds are getting to a point here where if they break out further, that is going to be incredible. My suspicion is that they're just about to get to some kind of resistance, and that's going to be a big test. If you look at the USM 14, which is down, now it's up. It's up, that's at 135 and 30 seconds. In leg E/B, I'm going to be watching this really closely. Let me just quickly put in my Chapman wave notation for the 120-minute chart. That's A to B to C to D to E, and a big spike. It looks like it. I'm going to call it F for now. It'll have to prove itself to say if it's a A. So that says you're probably going to form some kind of an oval pattern here, and that gives you, it's almost like, oh man, this is very interesting. It's almost like, there we go, up and away and down. Okay, see that big oval pattern is almost like a rectangle actually, and that's saying it could be a containment area for now. I'm going to be watching it closely. Leg E in the monthly, in the weekly of the T-bonds, and TLT is in leg. Oh, it's alternating. Now it's in leg C, so that's still very positive. Isn't this interesting? Okay, let's go through the numbers here. And the Dow is down 19 at 16,534, 39. The S&P down 17 at 1880. The composite index is down 156. Now gold had a spectacular reversal. I was on doing the show earlier on, 9 o'clock Eastern time. The dollar had rallied and gold pulled back sharply. I'm on a bit of a delay, and you can never, if I was trading this, there's no way you can be on a delay if you're trading. So I was on a delay, and I said that gold should go lower if the dollar's rallying. Well, the dollar did rally, then it stalled, and gold went right down to 1272, round number low. And then what did it do? It spiraled high. The 200-period moving average, bam, it hit it once again, just as back in 29th of April. It hit it at 1302. This time it hit it at 1290.30. I'm not sure if that's the high. But right now it's just falling right there. Isn't that interesting? So that's gold. Let me just come back to this in a moment here. Move this way so I can see it better. So we've got gold up 19 at 1302.50. You got silver at 48 cents at 19.53. You got platinum now up 18, down before at 14.42. Copper come back up. It's 3.06. This is at 3.50. I have to tell you something. Watching copper, it's starting to make higher highs and higher lows. That to me is very impressive, because it was failing earlier about 2 weeks ago. The last week or so it's just been trying its very best to keep rallying. The weekly chart has improved. You've got a peak E with a doji high. But if this containment area up at a higher level in the 3s instead of in the 290s, 280s, this is going to say copper is improving, and that should be a market sign to say that generally the economies are starting to improve. We'll see if that's true. The weekly chart needs to break 3.13 to say that it's breaking the resistance line. As I said, bonds are now up a point at 136.04, and the dollar is up 0.1, and euro is down a tad. Yes, euro is down. Okay, so with that said, we're going to Mark in Denver. Hi, Mark. How are you?
Good, Basil. How are you?
Good, thank you.
Good, good. So I took a really nice profit on one of our momentum plays.
Wonderful.
And I never played the one that I'm asking you about, the LinkedIn.
Okay, good.
And so I'm looking at possibly, I'm wondering if this has any strength left in it, or do you think this move is done and it's going to do a dreaded H and possibly break?
So let me just say that LinkedIn LNKD is trading at 151.94, down $9. We had 3 trades in this. We had 3 trades, and we've got one that's still hanging in. So the one we made about almost $7, the other we made $9. And I decided this morning that we've got a core position quite a bit lower down at 150.25, 155.25. Oh, that one was taken out. So let me go through this again. The core position is at 150.25. That's still hanging in there, and hopefully, if it gets stopped out, it'll still get stopped out with. Oh, it did get stopped out. All right, I was wondering about that. Let me just double check here. Yeah, so it got stopped out for a 2-point game. A 2-point game which we just gave up because I thought at 155 was a chance that it could hold just into a little bit into the gap and then try for the 9-period moving average. It didn't. It just went plop. So that's out altogether. Now, your question is there a chance that after 40, I think it's a 44% decline, that LinkedIn is going to form some kind of a support area here, and that it would have a bounce? And the implication of your question is, could it have a bounce that has more duration necessarily than maybe price, but even then a percentage move from the 150s to the 174 9-period moving average would be a 20-point move. That's nothing to sneeze at. So here's my answer. I need to wait for the day to settle because the news came out yesterday about earnings, and there was quite a bit of disappointment. If you dig into a little bit more, I'm only into what was said. I don't actually go into the numbers myself. It seems to me that there's just enough leeway to say that LinkedIn has had a tremendous decline in the sense that it went up so quickly. This is one of those where the left side actually took longer to go up than the right side has come down. And that always says to me, when you're building momentum to come down and you can't get any decent bounce, you've got to wait a tad and identify exactly what would be support. And I think we've done that. So I'm going to come back. Can you hold on?
Yes.
Okay, great. So we'll come back and we'll talk about the 200-period moving average at 142.56. Can it hold the price? And I'll be right back with Mark in Denver talking about LinkedIn. Dow's down 12, S&P's up.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're on right now, and we're looking at LinkedIn Corporation, LNKD, trading at 152.72, down 850. It went from 143.26 to 164. That's 21 points up, and now it's come back down very sharp because earnings yesterday, in a sense, were disappointing. In a sense, it's telling us that there's slow growth, but at the same time, just pure valuation. No, I should not say valuation. In an assessment of the very sharp decline, which I believe, let me just double check. I want to give out a number that's not correct. From 257 to 143, I think that's the one that's about a 44% decline. Is it correct? Yeah, 44% decline. I'm of opinion right now that with a little bit of basing over the next, maybe going into Monday afternoon, Tuesday morning, will the real test. And I'll explain what I'm looking at, Mark. The pattern I'm looking at based on the MACD and stochastic says there's still internal strength enough to hold the price, but the price is the arbiter of the trend. In other words, it looks like the MACD could hold the price between 151 and 150 right now, maybe touch 149, should not go below 148.01, the low of at 11:30 on the 30th of April. But what's really important about this is that the stochastic is holding and starting to flatten out, and that's a very good sign. But this is short. The day's only 2 hours young. Anything can happen. Most importantly, what I've done is I've drawn the potential for an R formation in the daily chart, and the stochastic at 11%, it was looking great right at the open this morning when there was a little bit of a bounce up to the 161.64 level. after yesterday's close, early morning slide, and then it bounced back. But what I'm looking at here is that there's a left side, right side price time match that was hit, and it never went under, just a few cents, and then it bounced, and now it's gone under it. So this becomes a very important bar, because this is the bar that says within 2 days there should be a snapback above 143. Let me just get that exactly right. Is that the one? Why is that not the one? That's not 160.24. Oh, that's interesting. Oh, that's all the way up there. Yes, there should be a snapback, and it should go, in fact, to the 150. It should go back to 161. And if it does that, then there's a chance that it could retest the high of yesterday. And that high was at 1.8. Now, I'm going to do this one step at a time. Are you going to play calls, or are you going to actually buy the position itself?
I'd probably play some calls out a couple weeks.
Okay. So that's a completely different strategy. What I would suggest with you, I don't think there's a rush to jump in, because even if it has a little bit of a rally, the 120-minute chart is suggesting that 156.73 is the 9-period moving average. It probably is going to have to bounce against there and test that a little bit. I'm going to suggest that you hold off until maybe Monday, or I would even think Tuesday. I'm also looking at this as market position, because I'm getting to the point where I'm real close to thinking of implementing some shorts, which I haven't done that now for a couple of weeks. So if that's the case, whether the momentum stocks are able to rotate and then find, while some of the big heavies in the cyclical area start to pull back, I don't know. Here's my recommendation. Between 150, where it is now at 152.47, but I'm advising not to do it right now, and the 148 and the 148 level, if that holds by 2 o'clock on Monday into 11 o'clock on Tuesday, then my recommendation is you could start a small position, buying some calls, but I would not get carried away. What I would do is I'd wait, and if a 164.16 is taken out after you implement that, I would add a couple more. And then I would just sit. You don't have to get carried away. This is going to be a retracement fader. I'm pretty sure that LinkedIn at some point is going to have to come back to retest the 140 area. But it could be a real nice, it could be about a 9 to a 15 session rally. And that could take you up about 20 to 25 points. That would be very nice calls. So that's my strategy. Hope that helps you.
Sounds good. Are you going to implement any more white lightning trades in the near term?
You know, I am. I was busy trying to get all this stuff right that I set aside. I need to get back my platform of options, and as soon as I do that, I'll see that we can do it, and I absolutely will. There are a lot of stocks that could give very nice moves right into the last day or so of an option expiration. Yeah, I will.
Okay, thanks, Basil.
Have a great weekend, Mark. Thanks for calling. I'll be right back, folks. The Dow's down 35, S&P's down 2.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you are under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Vail. Vail is Vail SA. It's I always write that down, then I always lose it. Vail. Is that Brazilian? Anyway, it's in the metals area. Trading at 13.53, up 34 cents. Question of the den. What about it? Well, the monthly chart is still very weak. The weekly chart is improving, having made that spike. Now, this kind of spike is a really fascinating pattern. It's that capital A, like an Eiffel Tower that goes straight up, center, but it stopped at about the 2/3 level at 13. And that 1297.13 area is really important, because if Vail by Tuesday afternoon, Wednesday morning, no, I'd say Monday afternoon to Tuesday afternoon, if it's able to get to 1364, preferably above 1383, the 9-period moving average resistance in the weekly chart, that's really good action. One of the best bits of information that I can get from this particular chart for a long time. And what's important about it is that the daily chart says that if it's able to break into that 1384 level, then the high of 1405, the candle of the 24th of April, will be a target. That's number one. Number two, Valet. It's Valet. And the low that was established, all I can say is that if by Tuesday it started to break down and it's under 13, forget about it. This is just a done stock. This is the first real opportunity that I can see whether there could be a move that could be a sustaining move. The last rally was, with the stochastic, was very poor. Now the stochastic starting from a higher level in the weekly. but it's still flat in the daily. So at 15%, you want to see the stochastic start to get to the 22 to 25% area. And it needs to do it fairly soon. If it does that, that's good. If it doesn't do that, it's just saying another stalling motion is coming out here. So that's that. The next question was AEM. I don't know if that's a question for me or if it was just an awesome shout out in the den. This is leg B in AEM, which is, whoa, nice chart. Of course, I had this all notated. You know that every one of these gold stocks I've had notated. Let me just do this again here. The monthly chart. A, B, C goes to a peak D. That's what you want in the Chapman wave. Monthly chart makes a top back in 2010 in December at 88.20. It had rallied off the 200-period moving average, treated the 200-period moving average as support, then broke down. Now it's resistance at 33.99. It's trading right now at 31.88, up 2.29, up 7.74%. Very nice. There's leg A. There's peak A in the monthly chart. Well, at this point, the monthly chart, a lot's going to depend on the next 2.5 points up or down. So if it's 2.5 points up, that's great because it'll start to tackle the previous high in the weekly chart. Weekly chart, series of A, failure, A, failure, A, failure. Now it's got A, B, C. D will occur if it goes above 35.46. In the weekly chart. But you've got the pattern that I talk about very often. It is the falling axe formation. Whoops. Falling axe formation looks like this, like that. And if it's able to break, I'll tell you right now. Oh, it hasn't closed. Let's just say it closes somewhere around there. If next week, at the beginning of the week, it's able to get to 32.90 to 33.20, there's a real good chance it's going to tackle the high of 35.46. Wow, this is a really big move at this particular moment. That reversal, now I think Tom articulated it very well. I heard him articulating it the other day, that I was in my car, I think it was, and I heard him talking about how the attempts at the bottom had taken out what should have been the stops, and that they were running out, in fact, of downside target levels, and that left it a little bit free, gold a little bit free to move to the upside, and he articulated a great turnaround this morning. So AEM is Agnico Eagle Mines, trading at 31.97. The daily is in a very strong leg B, and it's above the previous resistance levels at 32. So let's see where it closes. Hey, nice move on AEM. Who in the den was it that had it? I think that was Z. Congratulations. Now there was another question. Okay, I've been wanting to do this all week, just haven't had a chance. XLF. I just wanted to do this. XLF is gone to a leg C. It's struggling and struggling. That monthly chart resistance and magnet line is something we'll talk about. We'll talk about it as soon as we get back, because we're going to go to Robert all the way over in Chicago. Hi, Robert. How are you?
Hi, Basil. How are you doing?
I'm well, thank you.
So, Basil, I've noticed in your conversations over your show over the past, you've talked about staples, you've talked about RAD, Rite Aid, and now I wanted, if you could look at Whole Foods Market. It's a brick and mortar, and what do you think about that?
So let me talk about a couple of things regarding Whole Foods. I've spoken about it positively over the years, and then I spoke about it as possibly coming under pressure at some point, because so many supermarkets in their grocery department have had no choice but to get more and more. There's very little that you can see these days that doesn't say organic. And, of course, you know what organic means. Today, organic means something completely different to what it used to, because it'll become commercialized. At a certain point, the word organic, well, it'll be looked on with disdain, because people will just either get tired of it, or it just means it's been polluted so much because the industry has taken over that it doesn't mean anything. And that's what I'm afraid of with Whole Foods. Here in the Boston area in Chestnut Hill, I haven't been yet. I'd like to go and see it. There's a company called Wegmans. Now, it really can't compare with Whole Foods, but it does offer another challenge to that particular industry, and they're starting to expand. So when I look at the chart of Whole Foods, there are a couple of things that strike me. When I talk about Staples, I'm talking about a company that's been in business for ages. Gosh, I remember 20 years or something, I had a friend who was one of the people that was implementing their stores. He was designing, or I don't remember what he did, something to do with their stores. And that goes way back. Now, as an IPO, we got to go back in, let me just squeeze this chart. We got to, I think it was 94. Yep, 94 was when, 92 was when Whole Foods came about. Now, Whole Foods was Bread and Circus. I think it started here in Cambridge. Well, I'm in Newton, but next door town, across the river, in Cambridge. And so it's been around for quite a while. Oh, actually, if I talk about Staples, let me see when Staples was an IPO. I think it was in the 80s. Let me just check. Oh, just a little bit before that. It was in the 80s, but not that much further, back in 89. So, yeah. So what I'm talking about is that the maturity of the innovative style of Whole Foods is coming under attack. And that to me is a worry. Not that it isn't a great company. It's just that there are certain aspects in business that go beyond whatever your criteria, whatever your modus operandi, whatever your plan is. They're just beyond. This is something that you can't do anything about. And when I look at Whole Foods, I say this is a mature market. It's a market that I now have to put a down arrow in the monthly chart at a peak E top at 65.59. It is testing right now. It tested kind of successfully an uptrend line in the monthly chart. Now I'm going to make that chart very strict right there. And that monthly chart, I'd say, would change if it breaks 45 at any point. But it's under the 9-period moving average now for 1, 2, 3, 4. This is, well, May's only just begun. For four out of the last 7 monthly bars since its all-time high back in October. So what I'm looking at here is a company that says on the chart it is now working harder to probably produce less results or less good results. When I look at the weekly chart, I'm saying to myself, lovely up move, but now it's got an equal. So this is a very steady move to the downside going into the bar of May of 2013 with a high of 51.86 and a low of 45.43. And the low so far, the low so far in this particular move is at 47.70. And it's attempting a rally, but the stochastic's still flat and the MACD's not that good. I'm suspecting that if one is a very long-term buy and holder and you bought it much lower down and you've taken a good deal of profits, you could keep a core position, because this is a situation where they are fighters. When you go into the bread and circus, I find that they are changing all the time. They are modifying. They're trying to get the best result. I like that. It means it's a company that's on its toes. But at the same time, I see a lot of wheel spinning. I think that what they're doing now is they're fighting a trend that is beyond their control. Higher prices, much more competition. So this is what I'm now. You had a position. I don't know if you still have do you still have the position?
No, I did sell it at around 56, and I'm wondering, they're coming up on their Tuesday, I believe, May 6th is they'll report.
Oh.
Will this be an opportunity to possibly short the stock?
Now, that's what I was going to say. I was hoping that you weren't going to say to buy it, and I'll tell you why. If it pulled back sharply, we're talking about 3 points. And then it tests a very important level, that 47.70 level. If it breaks under it, what it's done is it's told the monthly chart, the MACD and stochastic hasn't yet found any support whatsoever, and then it weakens once again the weekly chart. So this is what I'm thinking. it'll be, I believe they're after the bell. If I remember correctly, they're after the bell. And then what happens is that there's a lot that goes on in there are a couple of companies that have really crazy overnight action, and then the next morning anything can happen. I suspect that if there is a positive result in Whole Foods, I'm not sure if you want to short the very next day. What did you say? It's the 7th?
I believe it's the 6th, Tuesday.
Oh, the 6th. Okay, so I'm putting down 5, 6, 14, just to remind me, because I'm terrible at this. I usually forget, and that's not a good thing to do when you decide to do things. Now, here's my thinking. If Whole Foods rallies sharply into the 6th, where's my book? The 6th is Tuesday. If it rallies sharply into Tuesday at the close, I would initiate just the smallest of short positions. Why? Because if it gaps up, there's a good chance that either that day or the next day, I'd be looking at it as a potential short. That's number one. Number two is, if you are wrong and you've got a small position, it's easier to handle it because at some point it should come back to the high of the day. Now, I'm going to make this clear. I don't want to say the high of the day just arbitrarily. I'm thinking high of the day closer to the 51 area. If it pulls back on Monday down to the 49s and then closes at 49.70 on Tuesday, on Tuesday itself, I wanted to tackle the high of the 24th. That's the 51.33 area. That's kind of what I would like as a best opportunity, and I'll explain why. There is a trend line that I've drawn, and that trend line has resistance. Now let's move 1 bar, let's go 2 bars. Resistance, and that resistance is at 51.23. So you can see I want to get as close to that trend line as possible. Why? Because even if it pops up, it'll probably have to do a little backing and filling so that your potential loss, because it's gapped up and now you want to get out of the trade because it actually isn't pulling back, by Wednesday it's still hanging in there, will only be about 1.5 points. I think for a potential short, small position with a 1.5 point potential loss is reasonable. So that's the way I would look at it. That's number one. The whole thing can be set aside, and you can just say, you know what, I don't have to actually take a chance because it's the way the market reads a result. I'm just going to wait. And if there's a gap up on Wednesday morning, that might be the position. And I will start talking about it Monday and Tuesday because I've actually written it down and I'm putting it in my book. I'm turning the page and I'm putting in Tuesday Whole Foods Market earnings. Now, there is a chance, just a chance, that I do an analysis on Monday or Monday night, and when I do my show on Tuesday, I'm going to say, I don't want to short Whole Foods because something's happened over the last 2 days that is quite impressive. So there's just a little chance, because the stochastic's at 51%. If by Tuesday it's rallied towards 68 or 73%, there's a chance I might say, hey, this is a move that could go all the way to 53.19, the 200-period moving average. Then it'll be a good one. So that's actually my recommendation. I'm saying don't do anything. Let's just wait. I'll talk about it on Tuesday, and we'll see what would be the best result, okay?
That's wonderful. Thanks, Basil.
Okay, so we're going to wait, and we'll look at a potential short in Whole Foods after the earnings report. I'll be right back. Dow's down 15, S&P's up a point.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of of shorting and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Hi folks, this is Technical Friday in the Chapman Wave methodology. So we've got the Dow down 7, S&P's up $1.50. Boy, what a struggle. What a struggle. I'm going to do a market overview right now. Then I'm going to go to the bank stocks so I don't run out of time. You see, there was a left side, right side price time match in the Dow from the left side at 16,631 on the 4th of April. Pulls back to 11th of April to 16,015. Starts a brand new move, and I chose that doji candles, one of the techniques that I teach in my Master Trader series, to give you a left side, right side price time match. And that said, by May the 1st, the 16,600 to 16,640 area, either toward, at, or just above the previous high, a rally should be attempted based on this dashed line, which I call the Chapman Wave Inside Wedge methodology. It's all in my CD introducing the Chapman Wave methodology, 476 slides. Only available at TFNN, and it said that there should be a test. And what happened is, yes, there was a test yesterday. The high was 16,604. Missed it by, 19 points or something, 29 points. But that took you to the time. Now, what's happened is extended. We went a little higher today. We missed the high by 11 points, 12 points actually. 16,620 was the high. All that's needed next week is to go 1 point above that 16,631 level, and you will start in the weekly chart, leg C. And that says that there's a good chance that that leg C will be accommodated by a parallel move in the S&P, SPX.X, going above 1897.28 by 1 penny. That starts leg C. By the NYA.X, that's the New York Stock Exchange, I think it's 1,860 stock or something, going above, what was the high? What's the high today? The high is 10,676. It's got 20 points, 23 points to go to make an all-time high and make it leg C. And that says you should get a leg D in May. And therefore, I have to be positive. And then after that, I'd be very careful. So, and it doesn't say how high. There's not that much in the way of points to the upside, and you're bumping to a lot of resistance. So it might be nominal new highs. That's the way I'm thinking right now. So now, and what's the support? If it fails, if they all fail to make new highs, all of next week, that means the Dow probably will fail by going, I said 16,554, probably going to break 16,380, 16,350, and do it before it makes the new highs, and then it's just a stalling. It says you're in a consolidation. So now let's go to the XLF. The XLF, which is the S&P Select Financial ETF. Look at this. I'm going to do the bigger chart. Don't forget to stay tuned for Nico and Paige coming up, living a primal lifestyle. And that 200-period moving average, where it broke down, the XLF broke down back in May of 2008, is now 6 years later. And we're talking about not getting to that high, but stopping at the 200-period moving average. And that moving average, so back there the high was 28. Now we're at 22.04. But walking the 9-period exponential moving average, that is so important. It means that at any point, if the XLF takes out and closes on a monthly basis somewhere around 20.50, it's only 1.5 points below. That's a negative. That says, be careful, stalling motion. Now the weekly chart says pretty much the same thing. I'm not sure I'm going to be able to get to all the charts, but the weekly chart is in this kind of consolidation area, and I will continue with this on Monday. But in the meantime, back at the ranch, when I went through all the stocks, too many of the financials are making the little H pattern at the bottom and says, just be real careful in the financials. So thank you for being here. Stay tuned for shows all through the day today, and check my opening call outs, my daily newsletter. Go to the front page of TFNN. Have a wonderful weekend. I'll be back on Monday.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.